Hey guys, what's going on? It's Rekt Capital and welcome back to the Rekt Capital channel. Thanks so much for tuning in today. I hope you're having a wonderful day. Let's dive into today's video where we're going to be talking about how different is this 2021 period that we've seen so far. So 4 months, we're in April, early April at the time of recording this video. How different is 2021 compared to 2017? So we're gonna first focus on quarter one of 2017 and then compare it to quarter one of 2021 and how these tendencies could potentially lay the foundation for what we could potentially expect going forward. And of course, answer a very interesting, important question. Where are we in the Bitcoin market cycle at the moment? So let's dive into the video update. Subscribe to the channel if you haven't already. And let's focus here on quarter one of 2017. So in 2017, one of the things that we need to talk about right off the bat is we saw two significant retraces, minus 34% and then minus 31% in quarter one of 2017. These two corrections occurred first at the beginning of the quarter and then at the end of the quarter. So this is just tying in with a tendency that I've discovered and shared on Twitter, that we tend to see Bitcoin bull market corrections of 30% plus at the beginning or the end of a quarter. And you can see that clear as day. This is indeed the case. So these Bitcoin bull market corrections they don't only have a depth to them in the sense that they're always somewhere between minus 30 to minus 40% deep, but there's also a situational element, a contextual element where it's at the end of the quarter or the beginning of the quarter. Really important to bear that in mind, because these corrections last only a few weeks. So you tend to see, so here in 2017, the first one was 7 days long, but then the second one was 21 days long. So you only have a few days, a few weeks, apologies. It would be great if it were only a few days, but you only have a few weeks to accumulate positions at a discounted price before seeing trend continuation in the bull market. So these corrections are common. They tend to occur at the beginning or the end of a quarter. They tend to be 30 to 40% deep and they tend to last only a few weeks. So in 2017, we saw two major Bitcoin bull market corrections, but we also saw a dip, a Bitcoin bull market dip, which was minus 16% roughly speaking. So dips are a bit different. They tend to not last very long, only 3 days, and they tend to be larger or at least deeper than minus 10%, but smaller than minus 25%. So when it's 25%, more than 25% deep, you can start to think about it as a correction. So right over here, one dip and two Bitcoin bull market retraces. And of course you see these dips in an uptrend, but basically speaking, whenever you see a Bitcoin bull market correction of minus 34%, for instance, you see a much larger uptrend, which recovers later on. So really good return on investment buying on these Bitcoin bull market corrections, because you tend to see a entire recovery of whatever we lost in the correction. So minus 34% here, and then a 40% recovery, minus 16% dip, and then a plus 37% recovery. And then you see a minus 31% correction. And then, of course, we know what happened in the later stages of 2017. So really important to think about the fact that, well, we tend to see corrections quite often. They tend to recur. They tend to be situationally organized near the end or the beginning of the quarter. And we tend to see Bitcoin bull market dips, which are shallower, but also very, very, they're much shorter. And of course you see many dips of minus 11% along the way, which are probably 1 or 2 days long anyway. So that's quarter one 2017 in a nutshell. Let's compare that to quarter one 2021. So right over here, really important to note that we only had one Bitcoin bull market correction, minus 30, minus 31%, and it lasted 2 weeks. So if we compare that to these two corrections, this one was 1 week long and this one was 3 weeks long, but minus 31 and 34% deep. So really, historically accurate, isn't it? You see history repeating itself. 14 days, 30% correction, nothing out of the ordinary at all. So after this correction, you see a 102% rally. So a recovery that is threefold higher, more than 3 times higher than what we lost in this period. So great return on investment to just focus on these Bitcoin bull market corrections and try and buy when they're in the 25% or 30% or even more region, because buying that would have resulted in a fantastic price appreciation. But of course, along the way, we saw 2 minus 16% dips, which lasted only 1 day each. Really important to bear that in mind, because we saw a minus 21% dip in early January as well, which only lasted 1 day as well. So really important to just stress that. We only had one major Bitcoin bull market correction, but we had 1, 2, 3, 4, and 5 Bitcoin bull market dips. And of course, these first 2 dips were 1 day long, and they were very sharp, very volatile, and less than 25% deep. So natural price action, especially when we see Bitcoin in the 30,000s regions, you can always see these sort of dips occur, which are 20%. That's just natural price movement. And these dips are going to be changing over time, of course, because if you see in 2017, minus 11% was a sizable dip, and minus 21% is probably the analogous dip for the 2017 period. So at the beginning of Q1 of 2021, we saw 1, 2, 3 dips, which were only 1 day long. And then we saw 2 dips, which were they were more extended, weren't they? 26%. So this is a bull market dip, very verging, on the verge of a Bitcoin bull market correction. Bitcoin bull market corrections are 30% to 40% deep. So this was still, in my mind, a Bitcoin bull market dip, and it took only 7 days. And over here, 18% dip, 13 days long. So you can see how, number one, there was only one correction here, 30%, and then a Bitcoin bull market dip, 26%, and then another Bitcoin bull market dip, 18%. So you can see 30%, 26%, 18%. These retraces are getting shallower and shallower, but they're lasting around the same time. 2 weeks, 2 weeks here, 1 week. So lasting a few weeks, that's normal. But we're seeing these retraces get shallower and shallower. But at the same time, these dips right over here, right? This only took 1 day, 1 day, and 1 day. Now these dips are getting a bit longer and longer. So while the retraces themselves are getting shallower, shallower, and shallower, because it's 30%, 26%, and 18%, these actual dips right over here are getting longer. 1 day, 1 day, 1 day, 7 days, 14 days. So even though the retraces are getting shallower, they are getting longer when it comes to dipping periods. So here's an interesting thing about Q1 in 2021 compared to Q1 in 2017. In 2017, you saw 2 corrections over minus 30% deep, but you only saw 1 dip. And if you don't really see dips in Bitcoin's price action, you're gonna have to somehow compensate and just pay off that debt later down the line in the form of a correction, because no dips in an uptrend is really unhealthy, it's unsustainable, and we tend to see crashes afterwards. And this is essentially what was happening in 2017, a correction just to correct for that over-optimism, overconfidence in the market, which resulted in very few dips. And this correction would just accommodate and compensate for those lack of dips, just to really bring back some health into the trend overall, because no dips in an uptrend is really unsustainable. So these corrections just correct for that and bring things back to stasis, bring things back to homeostasis, just to make things a bit more healthy. In quarter one of 2021, we arguably have a healthier uptrend because, yes, we saw one correction, which is totally healthy in of itself, but we've seen many dips along the way up, right? We saw so many dips. We saw 1, 2, 3, 4, 5 dips compared to the one dip that we saw in 2017. So the fact that we've seen so many dips in this trend means that we can stave off a Bitcoin bull market correction because we've had a healthy uptrend. We've had the ups and we've had the downs. We've had a healthy uptrend, a healthier uptrend, and a more sustainable one. So we don't have to correct sharply to just bring back that health into the market because it's already quite a sustainable uptrend. So this is the main way that quarter one in 2021 differs from its 2017 counterpart. We had more dips in 2021 compared to 2017, and we had less corrections than the corrections in 2017, which probably goes hand in hand with why we saw so many dips in this uptrend in 2021. So really, if you just focus on what we're seeing here, minus 30% occurred at the beginning of the quarter. We saw a retrace at the end of the quarter. So that's very similar to what we're seeing in quarter one of 2017. Retraces at the beginning and at the end of the quarter. These retraces take 3 weeks, maybe a week. Here we see 2 weeks, 2 weeks and a week. So really nothing out of the ordinary. 30% as well. The 30% correction, like we saw a 30% correction in quarter one of 2017, and bull market dips, which were around 25% but less, many of them happening, and these uptrends tend to eclipse the corrections that occurred previously. So you can see that this 26% dip was followed by a 43% uptrend, which eclipsed this, of course. So the question is, guys, how different is quarter one 2021 compared to quarter one of 2017? And the answer is not very different. So going forward, if we don't have many differences in these quarters, and in fact we have more similarities than differences, then that should give us confidence in what to expect for quarter two going forward. And if we focus on quarter two, we see many periods of uptrending price action, right? But we see many periods of consolidation. So quarter two has historically been a fantastic period for not only the Bitcoin uptrend, but also for consolidation in Bitcoin's price action, which will facilitate altcoin price action. So great time, quarter two, historically a great time for Bitcoin uptrends and altcoin uptrends as well. So it's a fantastic time to be in the crypto market because we're going to have a fantastic quarter two going forward. But make no mistake, we're probably going to see a crash. I don't want to use that word because that's probably too loaded emotionally. We're going to see a Bitcoin bull market correction. That's going to be probably 30 to 40% deep. And not only that, it's going to be the longest Bitcoin bull market correction that we've seen in this bull market. And it's probably going to be the deepest one as well. But just remember, if you can remember from this video, that at the end of this quarter, we're going to see that crash. We're going to see a long and deep crash, but it's going to be a healthy one, but a much needed one after such tremendous upside. But many people are going to be calling for the end of the bull market, and people are going to be talking about the bear market starting. But I just want to reiterate to you guys that in 2017 we saw something similar. An extended and deep downtrend followed by fantastic upside later on to new all-time highs every time, with retraces in between as well before the actual bear market occurred. So lots to look forward to, not only quarter two in its entirety, but really important to just remember that there is going to probably be a correction at the end of the quarter, one that's really deep and really long as well, probably over a month long in time. But then afterwards we're going to see the party continue. So lots to look forward to on the bullish side for the time being, going forward for both Bitcoin and altcoins. And lots to look forward to still going forward, because this is probably where we are in the market cycle right now when it comes to Bitcoin's price action. And having said that, guys, thank you so much for watching. Leave a like if you enjoyed the video, and of course subscribe to the channel if you haven't already. I'm Rekt Capital, and I'll speak to you in the next video. Speak to you soon.